Hi, in this part of the chapter, we will be talking about the accounting equation. We start also talking about assets, liabilities, and stockholders' equity, as well as the relationships between all these kinds of accounts. So, the accounting equation is an essential building block of the accounting process in general, and it applies to all economic entities, regardless of the size, nature of the business, or the form of business organization. So whether it was a large multinational corporate or the deli around the corner, the accounting equation still holds. It provides the underlying framework for recording and summarizing economic events at that economic entity. So it has three major components. Those are assets, liabilities, and stockholders' equity. So assets, you can think of them as economic resources used by the company in order to run their business. Equities are the claims of the owners against those resources. And credit and liabilities are the creditors' claims against these assets. So this is why assets, liabilities, and stockholders' equity in this form, when we say assets are equal to liabilities and stockholders' equity, basically what we're talking about here, we're talking about what the company owns versus what the company owes. Assets are what the company owns, and liabilities and stockholders' equity are what the company owes to creditors and to owners. And generally speaking, creditors have a stronger claim over the assets than owners do. So in other words, if the company goes bankrupt, creditors get their money first, and then later on, whatever remains is distributed on the owners. Now, assets are basically the resources that the company uses in order to conduct their business activities, such as sales, production, etc. So basically, they are consumed or used in order to generate revenues. The main purpose of assets is to generate, to be used in order to run the businesses, and as the purpose of business in general is to generate revenues, those are, this is when, like for example, when Rutgers, they buy a new building to open new classrooms, which would also it can be also used to provide classes to students that would generate also revenues from tuition fees, etc. Examples of assets include, but they are not limited to, you have cash, of course, equipment, lands, buildings, inventory, accounts receivable, and those are whatever the company, whatever customers owe the company. When we talk about liabilities, basically we are talking about debts. So these are the claims of the creditors against the business assets. In other words, those are the obligations and debts that the company has to pay. And creditors can be anyone who has lent the company money. So for example, a bank, or in certain cases it can also be a vendor or supplier, where the company purchased certain say equipment or supplies or raw material, and they did not pay in cash. So in that case, they have credit. In this case, the supplier becomes the creditor of that business. They have to pay for that later on. And examples of this also include notes payable, accounts payable, rent payable. This is whatever the company owes to the landlord, or accounts payable, like we said, it's whatever the company owes to their suppliers, for example. Salaries and wages payable, this is the money that the company owes to their employees, etc. Now, the last part, the third component of the accounting equation is stockholders' equity. Well, this is this is the claims of the owners of the company over the company's assets. It is usually it's also known as residual equity, and the reason we call it sometimes residual equity is because whatever remains after paying all the debts, whatever remains from the assets, that can be claimed by the owners. Sometimes it's also called, by the way, sometimes it's also called owner's equity, sometimes shareholders' equity, etc. So when we talk about residual equity, here we're talking about all the assets, so the total assets minus total liabilities, that would be equal to stockholders' equity. Now, stockholders' equity is divided into two components. You can talk about common stock, and so in this case we talk about common stock and retained earnings. Common stocks are, in general, those are the investments or the total amount paid by stockholders for the shares that they bought. These are the investments in the organization made by individuals or other entities or something like that. Those are not the investment that the company buy in different organizations. So those are the investments that shareholders basically invest in this organization. Retained earnings, on the other hand, is the part of earnings that is not distributed as dividends to the shareholders. So this is the part of the net income that remains in the in the company, and usually companies, they keep this in order for future expansion or to run the business in the future. And again, it can be computed by subtracting expenses and dividends from revenues. So basically, it's revenues minus expenses minus dividends. Revenues are asset inflows or reduction of liabilities that result from the normal operations of the business. And they affect stockholders' equity due to business operations and business activities. So in other words, these are the activities such as sales, providing services, etc., lending money for and getting interest that the company performs, and they earn money because they earn money from the company's customers because of these sales or services. So you could have, for example, if you're a landlord and you're renting an office, that could be rent revenue. If you provide legal services, that could be service revenue. If you sell TVs, that would be sales revenue. Banks would also have interest revenue. On the other hand, expenses are the cost of assets that are consumed or the services that are used in the process of earning these revenues. And what they cause a decrease in stockholders' equity compared to revenues, which increase stockholders' equity. So expenses, they decrease stockholders' equity, and those are the costs that are incurred during business operations. They can also include, so those can include services that the company receives, salaries expenses, we have rent expenses, tax expenses, etc. Dividends is the part that is distributed back from retained earnings, so that is distributed back to the owners. So it is very important to note that dividends are not an expense. They are just a reduction of stockholders' equity. Basically, if the stockholders' equity is $100,000, you give them back $15,000 in dividends. Now the stockholders' equity becomes $85,000. And as a summary of the effect on stockholders' equity, we can see that revenues and investments, they increase. When they increase stockholders' equity. whereas dividends and expenses, they decrease stockholders' equity. So far we have been talking about the basic accounting equation, and that is assets are equal to liabilities plus stockholders' equity. Now, stockholders' equity can also be divided, as we mentioned before, into additional, into more detail, and in this case, the expanded accounting equation would break down stockholders' equity into common stock and retained earnings, and then you add also revenues minus expenses minus dividends. This is the one that is usually used when we analyze transactions, and this is the one that we will be using later on in our transaction analysis. Now, as a small exercise, let's see how we can classify the following items. So basically, we need to classify each of these items as revenue, expense, or dividend, and then we need to also look at the effect on stockholders' equity. So interest expense, we know that this is an expense, and expenses, what do they do to stockholders' equity? They decrease stockholders' equity. Sales revenue is a revenue, and as a result, it increases stockholders' equity. Wages expense, those are expenses, and what do they do to stockholders' equity? Again, they decrease stockholders' equity. Stock dividends this is dividend, and they also decrease stockholders' equity. This is the end of the third part of chapter 1, and that basically summarizes the accounting equation and the expanded accounting equation.